The US dollar is lower versus the three major currencies, the euro, the yen, and the pound sterling. I'll go through the technicals that are driving these three currency pairs in this video, so let's get started. Looking at the euro versus US dollar on the 4-hour chart, if I go back to the low in May, it was like May 7th or 8th, and you look at the 50% midpoint of that move, the price fell this week below that 50% retracement level at 1.14919. That was more bearish, and you can see that the rallies up through here during trading yesterday came up toward that 50% retracement and found willing sellers. Yes, the price ticked above those levels, but there was never any momentum, and the price ended up moving to a new low late in the U.S. session yesterday. But we could not get down to this swing area target down through here, nor get down, nor break through that level and kind of look toward the 200-day moving average. It wasn't meant to be. In trading today, the price moved back above the 50% retracement, and we pretty much saw the sellers turn to buyers right away. And they have since pushed the price up to this swing area up through here, which was home to a number of different swing lows and swing highs going back in time, outlining some of those levels through here. And trading last week, we came down toward that level, found willing buyers near the end of the week, and pushed higher in the trading this week. We moved below the level and stayed below that level. So this area between 1.1518 and 1.15295 is the next hurdle to get to and through. And then we'll look toward this floor area right through here, which was a double bottom going back in the month of October. And then we had another bottom there before breaking to the downside. This area comes in around the 1.1545 level. You can see the floor. Break and becomes a ceiling. That is going to be the other level to get to and through. So the sellers had their shot below the 50% retracement. They missed. We saw the price rebound back to the upside, and now we're trying to get to the targets on that directional bias for this currency pair. Let's take a look at the dollar versus yen next. Looking at the hourly chart, we did move back above the 100-hour moving average yesterday, which opened the door for a retest of these highs right through here from earlier this weekend, last week. They came between 154.43 and 154.48. The high price couldn't quite get there, and we started to rotate back down into the close. In the Asian Pacific session, we traded above and below the 100-hour moving average. That's this blue line right through here. And in the European session, we decided, well, it can't go higher, so let's go lower. And we push back in between the 100-hour moving average here and the 200-hour moving average here. And that's more of a neutral area as we head toward the end of the trading week. If the price is going to go higher, we need to get above the 100-hour moving average. If the price is going to go lower, we need to get below the 200-hour moving average and go from there. So that's a decision tree for traders. But right now, the buyers had their shot. The sellers, for that matter, had their shot earlier this week, but breaking below the 200-hour moving average. Each of those shots they took missed. So we're back to the duel between buyers and sellers. We'll see how that plays out, but understand that dynamic in that currency pair. Finally, the pound versus U.S. dollar. We saw the price move higher in trading before the Bank of England decision. The Bank of England decided to keep rates unchanged. But the vote, instead of being expected at 6 versus 3, with 3 dissenters voting to cut rates, it was 5-4. So just one vote separated a cut from a no cut. Governor Bailey, the head of the Bank of England, kept rates or decided to side with those looking for no change in policy. And the 4 other people who voted that way are pretty much more hawkish. So if we go into December with everything the same, the decision will be on Governor Bailey once again, like it was basically today as well. We do have the budget. We also have the fear of lower demand that could tilt the bias one way or the other for the vote in December. But we did what you can see here on the 4-hour chart is that the price did come down a little bit, but not a lot. We're still higher on the day with the pound versus U.S. dollar. If I go to the hourly chart, what we couldn't do was stay above the 100-hour moving average. That's a blue line in this chart, and that's going to be bias defining level for today. And as you can see, right here, we're just below that level right now with the price currently trading at 1.3087 or there. Well, it's pretty much right on it, if not right above that level. Buyers and sellers are still battling it out, and if the price can get above that 100-hour moving average and stay above that level, we have the potential to move back higher toward that 38.2% retracement level. Looking at the 4-hour chart again, that 38.2 retracement is of the move up from the 2025 low way back in January to the high price that we saw right here. 38.2 is broken in trading this week with more momentum, and so returning back toward that level, which by the way also corresponds with these lows right here, is going to be a key borderline, a key bias defining level for both buyers and sellers at that level. So keep that in mind as if we see further upside momentum. If we do find sellers here against that 100-hour moving average, then the bias remains more to the downside with the potential to move back down toward the swing area right here in the 50% retracement at 1.29433. So there you have it, a look at the three of the major currency pairs to kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.